We're up about 160 points for the Dow Industrials. Interesting news on inflation this morning. It's tame. At the consumer level is just 2.5% over the past 1 year. We'll call that tame, and it's helping stocks. Chick-fil-A teaming up with DoorDash. So what's this?
DoorDash is the online food delivery service. It's yumminess straight to your door, courtesy of Chick-fil-A. They're going to roll this out nationwide, 1,000 locations. What's interesting, though, the company said the deliveries would be made within a 10-minute radius of participating locations. And we were just talking about in the commercial break, 10 minutes in Manhattan is probably different to 10 minutes out in the desert of Arizona.
Yeah.
So there could be a big disparity on how far out they are going to deliver. Regardless, it's just a minor thing. If you live within 10 minutes of a Chick-fil-A, good for you. And they're giving away 200,000 chicken sandwiches and waffle fries free to kick off the event. So
well,
exciting.
We are within about 500 yards of a Chick-fil-A.
It's a beautiful thing.
We can get it delivered.
Yes.
All right, we'll try that one. Now, this one really shocked me. I didn't realize it was coming along so fast. Google's Waymo is going to roll out a driverless car hailing service next month.
In Phoenix, Arizona suburbs. So, yeah, this is coming within possibly weeks. Early December could be the launch of the robot taxi in the suburbs of Phoenix.
No driver.
No driver. And you can request one if you want to be comforted and have, they will have backup drivers available.
But it's a hailing service. Hailing to me means you stand on the side of the street and wave your hand and they stop.
It's astonishing. So, again, this is coming sooner than expected.
Yeah.
And now Morgan Stanley says this business could be worth $80 billion. Separate from that, the driverless trucking technology out of Waymo could be worth another $96 billion. So these are big businesses being launched, robot taxis and now robot trucks coming.
It came so fast.
Yeah, we've talked about it for so long, but here it is.
Just boom, right there it is.
Right.
You know, we've had a lot of predictions on the program about the price of oil, and this is important because the price of oil is important for the stock market and certainly for the price of gasoline, which is falling sharply. We need a professional, and here is Stephen Schork, the man behind the Schork Report. All right, let's get straight at it, Stephen. Where's the bottom for the price of oil?
Zero.
No. You know what I'm talking about. Is it 45? Is it 50? Is it 54? Are we at the bottom now? Where is it?
No, I mean, from a production standpoint, we're at the bottom, but no one can tell. This is the proverbial Stuart falling dagger. Go ahead and buy it and risk trying to catch that falling dagger. What we have here, Stuart, and I'll just preface this with the fact that I have an advantage because I do produce a daily letter, so I am accountable for everything I say on a daily basis. What we're seeing right now is some major energy fund is absolutely blowing up, and this is the catalyst of what we've seen. Over the past month, we've had a 25% decline in crude oil prices, and at the same time, a 30% increase in natural gas prices. Stuart, fundamentals simply do not move that fast to that degree. So there is a large trader, a prop house, that is losing a lot of its own money right now because they obviously had the wrong position going into this debacle at this point.
So what you're saying is this is a technical thing. This is not a fundamental supply and demand thing. The sharp decline in the price of oil, which we saw in the last couple of days, that's all about a big fund having to unwind its position. Is that what's going on?
That's logically the only thing that really makes sense. Because what happened, and what I was telling my readers is, we had a big rally at the end of the demand season in August and through September. This made no sense because demand was at its weakest. As we found out through the CFTC data, large proprietary traders had been buying up crude oil through this rally. The problem now is they are long. Liquidity is down 10%, and they are being forced to exit the market in a low liquidity market, and they're being made to exit their positions.
Okay, so we are close to the low. $54, $55 a barrel is very close to the low, in your opinion, yes?
Yes. As far as all the oil traders on the NYMEX, I would say we are searching at the bottom.
I got to ask about the price of gasoline. Are we going down to like $2.50 national average, $2.30 national average, $2.67 now?
Right. So there is historically a 2-cent relationship with the price of crude oil to the retail price. So with giving 12 consecutive days of declines in oil prices, we are certainly headed lower in gasoline prices. But let's keep in mind, we're at that DY over DX moment. We're at that transition. Demand is going to start picking up.
I don't care about the DX, DY. I don't know anything about all of that. Give me a number. How far down is the national average for gasoline going to go?
Honestly, Stuart, tell me, what is I don't care what the national average is.
Well,
what
I
is
do.
it? I care.
Most people do.
Our viewers do. All right. Look, Stephen, I'm sorry I'm out of time. We'll grab you again next time. Good luck. Check the
Thanks,
market
Stuart.
now, because we're up about 150 points on the Dow Industrials, and most of the Dow 30 are in the green. How about this one? A vegan fund. That is a company, a fund. They only invest in vegan-friendly companies. How about that? Would you invest in that? Well, I'll tell you all about it next.
I am an independent financial advisor. When I meet a new client, I start by asking questions like, did you understand all the fees you were paying? Was your broker a fiduciary? Were you satisfied with the attention you were getting? Then I explain being independent gives our firm the freedom to give our clients the attention they deserve. We can put a plan together that makes sense for them. Independence lets us do that.